Dollar strengthening over the last several weeks, especially against the Japanese yen. Rebecca, this is something that you flagged to us. So you're watching the potential parity against the euro. We've been hearing more and more about that, too.
Yeah, so the euro is down about 4% against the dollar since the election, just around the election, which is a pretty big move in such a short period of time. And when I think about where it goes from here, the market has removed some Fed cuts for the U.S. The Fed is looking for more rate cuts from the European central banks. So that rate differential, you could argue that's priced in. But if we get some of the policies from President-elect Trump, whether we're talking about the tax cuts, deporting immigrants, tariffs, all of those things are inflationary. So that could remove even more Fed cuts from expectations. So right now we have 3 between now and the end of next year. We could go to 1 or 0, depending on whether or not those policies lead to greater inflation and inflation expectations. So that's a biggie. Europe is just hard time getting out of first gear. Germany's going to have 2 years in a row of negative growth. So there's not a lot to pull capital into Europe right now. And then, of course, they're a lot closer, sadly, to the Ukraine-Russia situation. I'd say the one positive catalyst on my radar screen for the euro will be in Q1 next year, and that is we're going to have an election in Germany, and the potential new chancellor, Merz, is talking about a little less fiscal austerity, actually spending money in Germany, which would be a big deal. And that could be a catalyst given valuations. Well,
they don't call it that.
No. They call it less austerity. Come on, be more German. But if we don't get that, I don't see a lot of bright lights anytime soon. So I do think parity is not a crazy thing to happen in the next few months.
Yeah. Okay, how about, I hope it's not an outlier, but if the Ukraine situation is resolved, I would think that would be a positive for Europe.
I would hope so. I think a lot is going to come around what does that peace or resolution look like? Are sanctions lifted? Is Germany allowed to start buying cheap Russian gas again? Or does it do a deal to avoid tariffs and it's buying more U.S. gas? I think there's a lot of questions around what that landscape looks like that tells me where we're going from here for Europe. There's going to be a lot of money that needs to be invested in Ukrainian reconstruction, too, which is good for Europe growth, but it's a big expense, and they don't have the money.
Dan channels his godfather to El Duro. I noticed something interesting.
Oh, yeah, I see what you did there. Yes, Michael down in Cuba.
Yen has been weakening at a pretty significant rate, while 10-year yield, like Japanese bond yields, have been going higher. There's something amiss there, and I think market's not focused on it here, clearly. I think they're focused on it over there. Thoughts on that?
Oh, absolutely. I mean, in Japan, the large corporations really want currency stability so they can plan their expenses, their investments. So when we get the gyrations that we've had this year in currency markets, it really slows down longer-term spending for Japanese companies. And that does eventually feed through into their earnings. So they want to avoid that. So I wouldn't be surprised if we see more intervention, verbal or actual intervention from Japan again in the coming months, just given the speed of this move. And obviously, Japan is very exposed to the United States. And if we do have a trade war, they're going to get caught in that crossfire.